Good morning, traders. Welcome to the TMT Traders Edge Report for Wednesday, January 3rd. All right, traders, right out of the gate, first day of the new year and of the new month, obviously, markets rallied up, gapped up actually, and the ES really gapped up, and most of those gains were on the opening. And now we're just hanging around at the upper end of the highs. You know, NASDAQ did very well as gold, crude oil, so all of the asset classes are moving higher. We have a great trade going in our gold for our premium Pro Trader Premier video research subscribers. So we're still looking to get long gold, actually managing our long position, I should say, and tightening up stops with gold. And once we get out of the gold position, we'll start covering that here at the Traders Edge Report, and we look for other areas where we can make money in this overvalued, very expensive market that we're in. So what do? Well, here at TMT, we continue to do exactly what the trend is, and that's to buy deep pullbacks until this market reverses. In the longer term, we are very bearish in the market, but in the intraday, we will not short the market. We'll continue to buy pullbacks and look for opportunity like we've been showing you in this Traders Edge Report. So let's get right to it. The ES right now, the 21 EMA is going to hold true. 2675, that's going to be your big area. Your bigger area here is the 2644 if we were to get some sort of a pullback, which, as you can see, we've been basically melting up since November. And that's just with that one recent pause. Then if you go back, then it's the end of September. So we've been really on an uptrend, and obviously up for the last 10 years, but let's just dial back. For the whole fourth quarter, we must have had maybe 3 or 4, maybe a handful of down days. We just continue to melt up. And I'm going to show you a chart tomorrow, Morgan Stanley Quantitative Desk. We just had to put it together. Basically, the world is all in stocks. That's a very bad omen when you have mutual funds, you have equity holders, you have hedge funds. Everybody is just about long the market. Sovereign wealth funds up, and I'm going to show that to you tomorrow in tomorrow's video. We're just prepping up the chart itself, but I wanted to get this video out to you, obviously. So that's a bad omen. We also had 1.1 billion shares to buy market on close. That's a lot of money out there getting put to work. Again, retail buying at the highs. It's inevitable, and this is the recipe for disaster, and that's why I keep saying, you know, look, in the longer term and the long-term accounts and the wealth management accounts, I would be tightening up stops, buying protection, doing what you have to do, because the money that you've made, you don't want to give back. There's no reason for it. Now, don't let the manager says, don't worry about it, market's going to continue to go higher, you don't need to do anything. Well, be proactive, because those gains, you've risked those gains based on your principles. So follow up with them and make sure you're on it, because when this market rolls over, guys, it's going to be nasty, and it's going to be very fast, where 30-40% of value of this market can be gone in a matter of weeks and months. So just be careful out there. That's all I'm saying. In the interim, the short term, the day trader, then obviously you don't have to really do too much because you're in cash at the end of the day. So just, you know, again, use a word of caution, just giving you a word of caution out there, not signing the sirens, but I am telling you that this market is in a topping phase and eventually will top, followed by a decent correction. We haven't had a real good correction since the 2009 lows. That's almost 10 years. So just saying, guys, this bull market is extended, and there's a lot of divergences going on within the market, in the intermarket. So just be careful out there. All right. So now let's go right to one of our trades that we've been managing here, and that's going to be the CF. Great trade. We're still working the trade. Now we had initially when we called it, was saying let's look for a consolidation or a pullback. Well, the consolidation happened, we exploded higher, and now we're on another consolidation. Intraday, I've had many emails from you guys that you guys have been trading it intraday, and that's fine. That's exactly what you're looking for. If you're a daily swing trader, then obviously you probably did not get in yet, but it's something to keep an eye on here for any deep pullbacks. This is getting acquired. This is starting to now be long via some big, decent funds. So just keep that in mind. The recovery process in this CF is happening. As you can see, what we had from, let's say, back in 2015 and 16, we've bottomed here in 2017, at the end of 16 into 17. So the recovery is ongoing now. Now, obviously, if the market were to sell off, this were to sell off, but this would be a candidate that I would be looking to get long on a long-term account, okay? And if you're not, then look for pullbacks in your day trading account, okay? Next is going to be OIH, and I mentioned this to you the last couple of videos. We have a beautiful ascending triangle. Oil is strong. The oil services will take off. And many of you took this trade this morning, yesterday morning, excuse me, and I've got a couple emails on that saying, hey, great heads up. Well, the trade's not over. The next resistance area off our algorithm comes in at 27.87 and 28.71. So not a bad looking trade here if you bought it around $28. No, let's call it, $26. 26.75, right underneath that 200. So looking pretty constructive here, guys. So pay attention to the OIH. Some of the components in the oil services ETF as well, you can trade as an individual instead of an ETF if you prefer to do so. We will be bringing a lot of these ideas to you, but right now we have a very expensive market. We have a very dangerous market where the passive investor is, like I mentioned, all in and continues to pile in at these highs. At any given moment, we can roll over and really start a significant correction. So let's just be cognizant about what's going on around us. In the meantime, let's start picking some of these trades that we've been giving you guys, and we'll continue to do so here at TMT. Have a great day. We'll see you tomorrow.